What's up everyone, it's Scotty with MoneyVest. In today's video, we are going to be talking about Robinhood and Sofi. And these are two fintech platforms that have been fairly new, that have been around for the last, 3 to 4 years, 5 years. They're fairly new startups, I would say, and they've both expanded user accounts and just grown tremendously over the last several years. And they are kind of like the future of fintech and online investing, trading, personal finance, lending, even credit, because Robinhood did launch a brand new credit card for all gold members. And that is quite an interesting concept because it has no annual fees, significant amount of cashbacks, and even no foreign transaction fees as well. So there's a lot of really good things to like about this credit card, which is exactly why Robinhood on the day is actually higher, close to 3% on the day, trading just under $20 per share. And Sofi, on the other hand, is also up close to 1%, trading at just over $7 per share. Now, Sofi is a smaller company compared to Robinhood. Robinhood has over almost $18 billion in market cap. Sofi has a little bit over $7 billion in market cap. So, just about Robinhood is twice as big, more than twice as big as Sofi. So I wanted to do a little bit of an analysis on both companies. We're going to go through some fundamentals, talk a little bit about the technical analysis as well. And this is really going to be a full detailed analysis, more so on Robinhood than as opposed to Sofi, because I've already done a couple of videos on Sofi, so make sure that you do check that out. So hope you all enjoy this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. I would really appreciate that, and links to our Discord and Patreon is also going to be down below if you're interested in joining us, and of course getting access to all the members only private videos, including all the trade alerts and trade ideas and options alerts, as well as our trading view charts and watch list, and our newsletters and the moneyvest.com website as well. So links going to be down below. We'd love to have you on board. So first things first, Jefferies just slashed its price target on Sofi stock. So we did get a little bit of a price cut on Sofi, which was downgraded from about from about $15 to $12 per share, maintaining the buy rating on the stock. And the analyst consensus expectations for the price is just under $9 per share. Now, I did do a complete fundamental analysis on Sofi, so make sure that you do check that out. Now, this right here is a little bit concerning for Sofi, as I mentioned in our Discord earlier as well, that we are starting to see a lot of executives from Sofi leave the company. I mean, it's not like a mass exodus, but there has been a few reports. I mean, one of them, left Sofi for PayPal, and here's another one. Chad Borton, Executive Vice President, Group Business Unit Leader, and President of SoFi Bank, has resigned. And it was one thing if they were, let's say, going to not work anymore, they were retiring, or they were basically going for any other reason apart from the fact that he left to pursue other opportunities and not due to any disagreement with the business. Right? I'd much rather have a disagreement with the business to leave than to pursue other opportunities, because that basically says, Sofi is not the best place for executives, for C-suite employees, because if it were so forward-looking, if it were the best place, I mean, they were building something absolutely amazing, everybody would want to be a part of that vision. Everybody would want to be a part of that future with the company. But the fact that there's been a couple executives now already leaving the company to pursue other opportunities is maybe a little bit concerning. Just we have to be aware of that, and just to understand that, okay, that is a possibility, that is going to be something that we have to kind of address and use in our analysis moving forward. Because if this pattern continues, then maybe it's not the people leaving, maybe it's the company itself, right? So we have to go over that eventually. So here's this right here, Robinhood launching a new credit card, 3% cashback, no foreign transaction fee included in Robinhood Gold for $5 a month subscription. So there are going to be some of my notes which I wanted to go over in this video to kind of help you better understand exactly what this entire product offering is going to be about. So this right here is going to be some of my notes that I took from the entire interview, which was quite long. So let me just bring that up here very quickly. Just 1 second. So there we go. So this right here are the actual notes here. So Robinhood launches a new credit card. Robinhood Gold members can get a gold credit card, and gold members are much more likely to adopt Robinhood's other products and services because, you're kind of like part of the inner circle. You're like internalized with the Robinhood products and services. Now, as we already know, Robinhood started off as a trading app. And in fact, I used to used Robinhood back in 2017, 2018. I used to use their platform to invest. Because of the lack of the customer service and because of multiple stories heard on different forums that, there's the lack of customer service due to some hacks and whatnot, I decided to do a stock transfer out of Robinhood and then go to, some of the more bigger and more trusted brokerage platforms like Fidelity and whatnot. But since then, of course, Robinhood has grown tremendously. And that's really what happens with any fintech application, right? They start off offering just one thing. There's one thing that you know them for, okay? If you think about any type of fintech company, fintech app, the first thing that comes to mind is the thing that they were using to market to the users. Sofi, student loan lending. That's it. Robinhood, trading app, investing app, right? Making it super easy for people to invest and trade in the stock market. Those are the two key important things that they market to get users in, and then the sort of expansion begins. Then the other products and other services come into the equation, and they're able to engage more users. They're able to offer more services, more products, and as a result, grow in assets under management, or basically funds under custody for Robinhood. So gold members, again, huge offering. I don't remember being part of the gold sort of members, but there's going to be a credit card now available with a very personalized private banking experience for the mass market for just $5 per month. That's exactly what Vlad also mentioned during the CNBC interview. And when someone joins Gold, they tend to increase their engagement and activity with Robinhood. That's kind of obvious because, like I said, it's a more better offering, better value that they're providing to their members. And credit cards are the most profitable financial services product, right? This should not come as a surprise, because that's why a lot of the banks and a lot of institutions try to force a credit card onto their users, because it's perhaps one of the most profitable financial services product, because the rates are just insane. I mean, on your balances that are carried forward, you're expected to pay 25 as much as 35% on a yearly basis, which is, again, quite insane. And then Vlad also says that we just have an amazing team, industry veterans who understand the risk in the capital and credit markets better than anyone. And we feel confident that this new offering will be beneficial to the users. It took us about a year to get from $0 to $1.5 billion in retirement assets on our platform. And yesterday, we just crossed over $4 billion in retirement assets. So it took us under 90 days to go from 1.5 billion to 4 billion after taking 12 months to get to that 1.5 billion dollars. And again, this was just supposed to be a trading app. Now they have over $4 billion in customers' funds saved for retirement. So that's the momentum that's really driving Robinhood to higher and higher levels at the moment. Now, coming back to this, Robinhood stock jumps after company launches first credit card. And there's always been a special perks and opportunities reserved for the wealthy that make them even richer. The new card brings us one step closer to the goal of giving everyone better access to financial system. Other perks include 5% cash back on when a holder books through the company's new travel portal. So they've also got a new travel portal here. Reward points are redeemable for travel gift cards and shopping at retailers including Apple, Nike, Bloomingdale's, and among others. And points can also be redeemed for cash, which can be transferred to the brokerage account to invest. And the move comes after Robinhood acquired San Francisco-based platform X1 for $95 million last June in an all-cash deal, and X1 offers a no-fee stainless steel credit card that also comes with no annual fees or transaction fees as well. It's a gold card. It's an actual gold. I think it's gold plated, or might be actual gold card here for the company. Now, this right here are some of the numbers that I wanted to go over. Let's just start with the balance sheet. So the company's sitting on a little bit over $4.8 billion in cash and cash equivalents, and just over $4.4 billion in cash segregated under the federal regulations that need to kind of reserve for funds from the users. And then, of course, you got receivables and other items as part of the total assets because it's a financial company. And we got 31.7, almost $32 billion in total assets for the company. Goodwill is a very small piece of the overall pie, 175 million, so that's good. And again, we've got users held fractional shares, held to maturity investments of $413 million, and other current assets, 63 to $207 million. But really the key area here to watch is the cash and cash equivalents sitting at $4.8 billion for the company, and cash segregated under the Federal Reserve federal regulations at $4.4 billion, with total liabilities sitting at $25 billion here. And then let's take a look at total debt. Securities loaned payable to users, accounts payable and accrued expenses, fractional shares repurchase obligation, other current liabilities total, so other non-current liabilities about 91 million. So really the company does not have a lot of debt here. Even if you come down to HOOD, on TradingView, I'm assuming the net debt's going to be negative because of the amount of cash the company has on the balance sheet with little to no debt here. So there we go, negative $1.2 billion in overall net debt here. So total cash they have listed for Robinhood right now sitting at $6.4 billion. So I'm assuming they're accounting for some other additional cash here, and total debt sitting at $5.25 billion for the company. So negative $1.2 billion. So the company does have a pretty solid balance sheet of, like I said, more cash than debt on the balance sheet as well. So I believe what they have done here is essentially, let's see, receivables and securities borrowed 3.5, 1.6 billion, and then have also accounted for the payable to users over here at $5 billion for the business as well. So again, balance sheet strong, more cash than debt on the balance sheet, so not that levered. And this right here is going to be the overall income statement. Now the difference between Robinhood and SoFi at the core is that Robinhood is not profitable. SoFi is on a GAAP basis starting to become profitable. Although I will argue that in the fourth quarter of 2023, they actually did show us some profitability, if I'm not mistaken. So there we go, 3 months ending in December 31st, 2023, we did see about a $30 million in net income. So this right here was a $30 million in net income for Robinhood at the end of 2023, which again is a big step in the right direction, because as the companies become profitable, that's where a lot of institutional involvement will happen. We've got $200 million in transaction-based revenue. We got $236 billion in net interest revenue, and other revenues of $35 million. So $471 million in overall revenue for the fourth quarter 23. These right here are going to be all of their operating expenses. So $445 million to be precise was the entire operating expenses. Operating income sitting at negative $3 million actually, and then we did have income before income taxes, so $29 million from something that's out of the ordinary. So really at the core here, Robinhood is break even on this fourth quarter 2023 if you kind of account for adjust for this number right here, which is adjusted income for income before income taxes, right? So this is not from their core operations for the business, but it's really just an income from what I'm assuming is going to be like an investment income or an acquisition or something that they have accounted for $29 million. So $30 million is really what the net income was on a GAAP basis. But again, it's on a core functionality basis. It's not profitable just yet. Now, coming over to the year ended 2023 with a net loss of about $541 million. So that is perhaps lower from 2022. And revenue did increase from $1.3 billion to over $1.8 billion. And if you come over to expectations here, expectations for revenue are going to be from 1.87 to now 2 billion to over 2.4, then 2.6, and then moderate in 2027. But profitability wise, 2024, they're expecting it to be the first year that Robinhood is indeed going to be profitable at 24 cents per share, with the shares outstanding sitting at around 748 million shares at the moment. So if you do the math here, 748 times 24 cents, we're looking at a GAAP profitability of almost $180 million. So if you do let's just do some intrinsic value analysis here, shall we? So if I bring up my spreadsheet and if I simply go over what the intrinsic value may look like for Robinhood in terms of its fair value, and again, we're accounting for about $180 million in net income for the business. So let me just bring that up here. So that's going to be this. If you move over to the 5-year DEM, I'm going to plug in Hood. We're going to plug in $180 million in actual net income for 2024. If you apply a growth rate of 30% with a 30 times P multiple, by the way, right now, if you do a forward price to earnings multiple on Robinhood, right now at 20 cents per $20 per share divided by 24 cents, we're looking at about 83 times forward earnings multiple. Forward earnings multiple for Robinhood at 83 times. Price to sales trading at 17.5 divided by about 2. We're looking at around 8.5 times sales at the moment, considering that they're going to be expected to do just a little bit over $2 billion in revenue in 2024, and they're trading at over $17 billion. So 30% growth rate at earnings, 30 times P multiple, 12% discount rate, 10% margin of safety, and let's just apply a couple percentage points for share dilution because it's Robinhood, they may dilute shareholders. We're looking at about a $10.60 in intrinsic value for Robinhood. If you go with, let's say, a little bit higher multiples of 40 times and a 40% growth rate, now we're looking at Robinhood trading at fair value, at its intrinsic value. So bottom line is, basically what this means is that if you believe that Robinhood over the next 5 years is going to be growing their net income bottom line profit starting at the end of 2024, beginning 2025 at 40% every single year for the next 5 years, and demand a 40 times price earnings multiple, which again is going to be a compression from 83 down to 40, then only then it is worth $20 today, which right now the share price is pretty much just under $20. But if you believe that, okay, the fair value or the growth rate and the price earnings multiple should be lower, we're looking at, let's say, 32, 34, 36 times earnings, 32, 34, 36% growth rate, then we're working more towards the $12 to $16 range. But if you apply higher growth rates and higher multiples, then we're looking at $27 to $34 range. So let me know your thoughts down in the comment section below, and what do you think about Robinhood? But the bottom line is huge momentum on the day today. I mean, the massive overbought, overextended RSI at over 81. The RSI has also been just absolutely crushing it recently on the weekly time frame. It's gone from $10 to $20 in just lightning speed, over 91% gain in a very short period of time, with a huge breakout after consolidating sideways for such a long time in this range here. So huge breakout, and again, a huge congratulations to anyone who's been trading or holding on to Robinhood for such a long time. Still lower, significantly lower from its all-time highs. I mean, all-time highs sits well over $85 a share. And it's still down about 76% from its all-time highs. At one point, of course, it was down a little bit over 90% from its all-time highs as well. So again, I hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like. Let me know your thoughts down in the comment section below, and what do you think about Robinhood. Make sure that you drop a like, subscribe, links to our Discord, Patreon down below with a 16% annual discount that's available until the end of this month. And as always, happy investing. I'll see you all in the next video.